There's the technical analysis, which most of us actually know. You see in the chart here, and let me expand the pound dollar because I'm going to actually use it for an example. This the fundamental analysis. The fundamental analysis. A lot of people don't go into that because most of the people that teach, they say, well, you're either a technical trader or you're a fundamental trader, and then you go yourself by that. So either you take one stand or you take the other one. But actually, we found out that when you incorporate both of them, it becomes a great tool. It has a more strength to the analysis. Now, the third one is the sentimental analysis, which is something like what's happening right now. And that's the hardest one to understand and the hardest one to actually see what's happening on. Sentimental analysis is because the market does have a sentiment, and the sentiment comes from uncertainty. When we have uncertainty like we're having right now on with the Middle East and this the drums of war or maybe something that's going on and maybe something is happening, things will change. I mean, we just saw a jump today of $25 on gold, and then we saw a jump of $5 on oil. I mean, those uncertainties actually are so concise and so strong that they would change everything that's happening on the market, and then you have to be on top of those things. And then the last one and the most important one of all is the trader's analysis, the personal analysis. Because if you don't know yourself as a trader, if you don't know how you react on different things, if you don't plan ahead, if you don't strategize, if you don't do risk assessment, then that's where the pitfall comes. And so most of the people that I know, that's the reason they don't do a live trading session, because those things are not incorporated into their system. So the market analysis becomes a really good standing stool that you can sit on, or you can stand on, and then you can actually take some results. You can get the assessment, and then from that point on, I mean, you can actually have this a good entry and exit point. So that's what makes us different from most of the things, or most of the marketing or other competition out there, and that's why we're very confident that we can actually do a live trading session, and we can actually say, well, we're going to go in at this point and we're going to go out at this point. So far, Raymond, I don't know if you have any questions in regards to what I mentioned. Okay, perfect. Okay, so going back to the charts, I mean, we do our technical analysis based on 9 indicators, and those 9 indicators are the ones that we have here. Let me expand the dollar yen, because dollar yen is the one that is having more sentiment today, and I'm going to explain why the sentiment is and why the dollar yen actually took a plunge. As you can see here, we have 1, 2, 3, 4, 5, 6, 7, 8, and 9 indicators here. Our basis and our strategy actually is encapsulated in one thing, well, in a series of things. One of them is actually finding a trend. Now, most of the people, they will tell you, well, right now it looks like a downtrend, it looks like an uptrend, it looks, sideways, things like that. But they haven't actually known where the trend is. It's really hard to actually get the trend, and it depends on your trading strategy. If you are a long-term trader, the trend that you want to find is on the daily. If you're a short-term trader like we are, then your trend is at the 4 hours. Now, it doesn't mean that we're gonna trade on a 4 hours basis. It means that the trend is looked at that point. It's 4 hours. So if we go here on the 4 hours on the dollar yen, we see two things right now. There's a very low point here at 93.61. There's the higher low here, there's another higher low here, and then this is another point here that it's actually almost at the same level as before. Now, we also see that we have a trend line drawn here where it has been bouncing with our indicators, and it's telling us that this trend line is very strong enough that it's not allowing the dollar yen to actually go higher. Now, today what happened, and this is a very unusual thing, and it's a very nice thing to see as well, because it makes us do better, and actually go into the market in a better sense. Um, the sentiment is that uh, the bigger investors are going to move from the dollar to any other currency that is not involved with the dollar. And that means the yen, that means the Swiss franc, that means Aussie or Kiwi dollar. And so that's what happened. The yen actually gained some value today because of the news coming out from Syria. So the reason of the plunge today was basically based in done by sentiment, not on technical, not on fundamentals. It's actually based on the sentiment market, and that's why you don't get into the yen right now, because we're getting into a point, and we are actually at a point that the sentiment is actually going to be um, hit by the fundamentals and the technicals of the market. And here's where the struggle between the two big giants, that we can call it, or the three giants, where we can call it, is going to start like a tug of war, seeing which one goes which way. And so as you can see right now, it's in between those things. Now, the other things that we actually see is the volume of the market. We actually see how the market is reacting to different things, and so we're seeing those different things on the market, and that's why we go ahead and we actually have an overview of what's going on in the market. Now, so since we're talking about the dollar yen is actually bouncing in between the same trend line, and the 97 area is actually an area of support and resistance. So now this and going by the technical analysis, basically the next step should go around here on this trend line. It should actually be the next step of the dollar yen, the 98.73. But because we know that it's not into this position, and this is by sentiment, then we have to wait what the sentiment is actually reacting to it. The other indicators that we use and the other indicators that we have are telling us that the shift of the weight between the dollar yen is actually changing, and the next step for the dollar yen might be going down to the same region as here. So that's we're talking about 93. Now, as I said, depending on what type of trader you are, if you're a long-term trader or you're a short-term trader, we need to see the daily. If you're a long-term trader, we can see the daily. And in the daily, we're actually at the SMA 200, which is one of the other indicators that we have. Now, we see that at the trend line that we talked about, that it's actually hitting in the same place, and now it's hitting on the SMA 200. And again, going back to the other indicators like volume and things, right now the dollar yen should be actually going up, and because of all the news coming out from the U.S., the dollar yen should be actually heading its way to the 100, 101. But we are back on the 97s, and in battling on the 97s right now because of the sentiment market that we're having. Volume, as I said, it's actually just going a little bit low. Now, the reason we use 30 minutes, and again, Raymond, I don't know what window you use on this, but the reason we use the 30 minutes is, and I give it an example, and it's something I would like to share with the people that will see it later, is that imagine yourself going to a football game or any type of professional game. When you see the market in the 1 minute, is basically it's a court side seat, or And so you see you seeing the same game, but you're seeing everything to on a close range, and you're seeing just one frame, where you're seeing just one section of it. Then you see the 5 minutes, and then 5 minutes is actually you stepping a little bit away from the court side, and just going back and back and back. Now the 30 minutes is basically just going to the middle section of the stadium, and then you can see the whole most of the playing field. You can see the same players and everything, but you have a better overview of what the market is. So basically, 30 minutes is that. 30 minutes is basically the overview of what's happening on the market. 4 hours is basically a very longer overview, and that's why we can actually see the trend there. So that's what makes us different. I mean, the experience, the approach that we have, the market analysis that we do per pair, and then we choose the pairs that we think are the ones that move more, so we can actually get in. So that's in a nutshell. That's who we are. That's our approach. That's what we are, and that makes us different. So far, this approach has proven to be very good. Our risk assessment in the market has proven to be really good, and we do have a plan of how much we are willing to do per day and how much are we willing to risk per day, and having a monthly goal. So let me jump into the other currencies that we do have. We also follow the Aussie dollar, the Kiwi dollar, the dollar yen, and the Kiwi yen. Um, Let me see. There's an opportunity right now to take a short on the Kiwi yen. Actually, we let's take a short on the Kiwi yen. The ideal position would be 75.66. Our target should be 75.34. Okay, Raymond. Yeah, and so that means that you're in what's called a short-term, medium-term trader, and using the 4 hours for trend and support and resistance. It's good. Um, it does give you an oversight, as I was explaining. The 4 hours does give you an oversight. Now, with in the approach that we have, it allows us to see on the 30 minutes what positions we can take. Like right now, we just saw because of the volume and because of the different things, as we see indicators that we can actually get into the Kiwi yen. I was at 54, 55. I'm sorry. The ideal would have been 66, but from this point on, we are looking for a target of 75.35. Now that's because not only the Kiwi yen is actually influenced by the Kiwi dollar, but it's also influenced by the dollar yen. Now, going back to the sentiment of the market, when the market is actually reacting to, we know that there's going to be some reaction on keeping going to the downside on the dollar yen with the Kiwi yen, and that's going to drive us to the target of 75.35 that we 75.34 that we mentioned. Now we're going to have another entry, a possible entry at 87.19 on the Aussie yen, and that's the other one we're gonna take. Oh, okay, okay, Rim. Okay, so I already give some entry points here. If you want to get into the Kiwi Yen, still is a good position to get in. Now we're gonna circle around the different currencies that we oversee. We also see the euro yen, the pound yen, and I do have them on a different window. So let me just jump into that. Okay, the pound yen is actually in a good position to get in a short. If it gets to 151.05, we can actually get in. And target price for the pound yen is 151. No, I'm sorry, 150. And we're gonna put it on 80, 150, 80. So basically, we have most of our yens on position to get in. Also, the other one is euro yen. Now, the problem with the euro yen is, and I'm going to circle back to the euro dollar, is that the euro dollar, and we have an bouncing here. The euro dollar might bounce from this point, and then the euro yen might be bouncing as well. So we're not going to take the euro yen because of that, but we do have the pound dollar pound yen actually heading in this direction. So we might see this in. We're just waiting also for the Aussie yen to come into our position. From the chat, from our chat window, we got in close to our entry points that we mentioned. We got in on the pound yen at the 151.02, which I did. Our target was 151.05. It got into 151.10. Um, we got a result of 10, almost 11 pips, and actually it's going back into that direction. We got into the close to the Aussie yen where we said Aussie yen 87.10. We got it a little bit early. 87. 87.18 was the entry point that we suggested. 87.10 I got in. It actually got in close to the 87.18, and it dropped down to 11 pips. I didn't mention the dollar yen. That was a one last minute thing, but I got 10 pips from the dollar yen, and then we got into the 90, the 75.66 on the Kiwi yen. Right now, it's still at that point. It's still a good entry point, and it hasn't dropped down. I got a little bit early at 61. And so from this point on, the Kiwi yen should go to 75.35. Now, as you can see, the entry points here, and then also you can see on the little chat window, we got in at 8:56, and then we got it out at 9:31, 9:29. Uh, Again, this is get overview. This is what we saw from the previous video. From the beginning of this video, actually a few minutes before, when we started our whole presentation, and we are actually 1 hour and 38 minutes into this whole session. And so as you can see on our results, we got more than 1% on our results on the money manager. So if you're interested in getting more information about our forex, about our live trading sessions, as you can see, getting the results in that time frame that we got in, you can go to artofforex.org. That's artofforex.org, and you can send us a request for a live trading session. We're more than happy to have you over. We can we can talk a little bit more of what makes us different. But as you can see, we get the results, and we get into our plan. We do have a plan as a trader, so we achieve those goals, we achieve those plans, and we have those risk assessments in placement. So we get into what we're looking for. So again, this is the window of results. You can see it. It's live. It's actually today is the 27th, and the time and frame, everything is shown here. So you can see, check it out yourself. Again, thanks for watching, and we invite you to share this time with us, and hopefully you can actually share with us and experience the joy of actually overseeing this market and getting to know the market and doing a market analysis so you can get the benefits as well. Have a great night.